Morning, everyone. Thank you for joining us for today's webinar, What is Life After Coronavirus? State and Local Tax, First Wave Response, and Second Wave Predictions, presented by Rea Associates, a top 100 regional CPA and business consulting firm with offices across Ohio. My name is Imani Fields, and I'll be moderating today's presentation. Before we get started, there are a few housekeeping items to cover. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out answers via email as soon as we can. When you receive this email, you'll also receive the recording of today's presentation, as well as a link to participate in a very short evaluation. Please take a few minutes to share your thoughts about the presentation as a whole, the information provided, and our presenter. Your feedback is important to us as we determine future webinar topics related to the current COVID-19 crisis. Also, if you'd like a copy of today's slides, you will find that they're available in the handout section of the webinar dashboard on your computer screen. Today's webinar will be given by Joe Popp. Joe Popp, a principal and director of State and Local Tax Services, is committed to staying on top of all state and local tax matters while providing extensive internal and external educational programs in an effort to provide maximum client satisfaction. He is well versed in sales and use tax, federal tax audits, state tax audits, and choice of entity. Joe earned his Bachelor's of Arts from the Ohio State University and his Juris Doctorate from the OSU Moritz College of Law. He also has a Master of Laws in Taxation from Capital University Law School. Today, Joe will hone in on insights about the first wave of state and local tax responses, how tax departments are answering to individuals and businesses, and predictions on what states will do in the future and result of COVID-19. Passing it on to you, Joe.
All right. Well, good morning, everyone. My name is Joe Popp. I'm going to be leading us through some of the content today on state and local tax and what's been going on with the coronavirus and COVID-19 responses. So I have a super quick agenda for us here today. We have the first wave that we're going to be talking about, what state tax departments are doing in response to COVID-19. Most of that is the relief that you've probably, been hearing a little bit about, certainly from our federal tax brethren. What are they doing right now? And so we're going to talk about that. I'm going to share with you a little bit about what is out there in the marketplace with extensions, a little bit of grants and the like. We're going to try and stay kind of laser focused on tax if possible. I'm not going to be covering exhaustively all the things that the state tax departments are doing. If you've been following the governor of New York, governor of Ohio, there's just all sorts of information out there in terms of what the states are doing. So we're just going to talk primarily about tax and related sort of things today. We have about an hour, so we're going to talk through a fairly high level when we're going through all of this. So I'm going to try and keep going through the slide deck because I do want to get to some of those second wave predictions, which is the second part of the presentation today. So you can see there, preparing for the next wave. So what's going to happen in the future? So right now we're focused on relief. We're focused on getting help to the people that need it, stocking up for our medical needs and the like. And then the second wave, a component of that is going to be probably more relief. And then the other component of that is going to be, how do we pay for all of this? And so I'm going to try and spin up the crystal ball and talk a little bit about that. Note that these are just predictions. They're just my predictions. They could be completely wrong. Some of them have already started to be talked about. And you'll see, as I point out in the slide deck, I'm kind of taking a national view on this. You'll sort of see that some of the states have already started thinking about that next wave and have already started to issue guidance on what's going to be coming. So we will go through that in a more specific way a little later on in the presentation. And then if we have some time for questions, I'll try my best to field those. I used to present quite a bit on the Affordable Care Act, and so the joke that I have that turns out to be eerily true is every time I would do this presentation, someone would raise their hand and tell me a new thing that just happened like the night before. So All of this was put together, a week or so ago, and then I've tried to update it as possible. Like even this morning, I was on with the group trying to make sure everything was good. So if something else has happened or have come out, this is just a snapshot in time. So I've tried to do my best for you guys, but the moment we end this conversation, it'll be outdated. So note that to start out with, on the federal level, we have the CARES Act and some other relief that are coming down from the feds. Note that there's a weird mechanic with the states. If you haven't really looked at this before or ever thought about it before, when the federal government makes a change to the Internal Revenue Code, how does that kind of bleed down into the state? And there's two main ways. The first way is this rolling conformity idea where, hey, when the IRS passes something, we're going to roll with it. It just comes right into our code. No problem. We don't have to worry about it. The second way is the static conformity. Basically, they take a vote and they say, hey, the feds just changed something. Do we want to include this stuff, all of it, or is there some stuff we don't want to include? And so the static conformity is the more troubling one at this point, because some of those states, the legislature has already, ended sessions. They're not in session. They're working remotely. They're not working at all. And so to pass a piece of legislation is actually kind of difficult. So as I point out there in the bottom, if you're in a state that is not Ohio, we're keeping tabs on Ohio and putting out guidance, quite frequently on that. Keep an eye out for your state executive branch or tax department to provide relief relating to the CARES Act. It's mostly federal relief, so we're going to highlight it a little bit as we go through the presentation. But for the most part, this is the last I'm going to be talking about the federal changes to really focus in on what the states are sort of doing. So let's jump in. What are the states doing? What kind of relief are we seeing? One of the first and easiest sort of things is extension. Look, there's a lot going on in the world. People don't really need to be focused on filing their tax returns on time, and most of them have better uses for the money right at the moment than paying them into the state. So 43 states, roundabouts, and Washington, D.C. have either filing or payment extensions. Note that not all states have income tax. So you're like, who are those, horrible 7 states? Not all of them have income tax. So most of these have extended to July 15th, which is the same date as the current federal extension. There are some variations on this, of course. If you've listened to my podcast or presentation on the Wayfair decision with State Nexus, you'll know that even a super easy, bright line, hey, it's July 15th, guys, this is the new date. The states can't get on board with that, uniformly. So you've got Virginia, that it's a payment-only due date to June 1st. Mississippi, it's till May 15th with a nod to Mississippi. They have a fiscal year end, and so to make it longer than their fiscal year end would cause trouble. So they have a restriction there. Idaho is June 15th, just to be contrary, I guess. So you've got some variation there. Most of the stuff that I'm going to talk to you about today, assume that if I can make a general statement, it's 80-90% true for all the states, but there's always going to be a few of them that are going to be different. So don't take any of this as gospel. Make sure that you check with your tax professional or with the state tax departments if you're living in one of these other states to make sure that you have a specific on what kind of things have been extended and not. As we'll see, just because they've extended income tax doesn't mean that they've extended the other tax types in the state. So for Texas, they have extended from May 15th to July 15th their franchise tax. So that's nice. And then you have a couple of these states that have extended the personal deadline only. So Arkansas, Massachusetts, Minnesota, Montana just have the personal deadlines extended. So corporate or franchise tax, it's game on as usual, regular due dates. A number of states did not delay March 15th related deadlines if there were March 15th related deadlines, only starting with, for example, Ohio, I believe is the April 15th onwards, the extension applies. And I have a number of slides on Ohio specific guidance we'll get to here in a minute. CAT, for example, for Ohio was not extended. So there's an additional piece here on the sort of income tax side, if you like. to do again, as I said, pay attention to the deadline. If you hear, hey, the state has extended, income tax for 3 months, 2 months, 1 month, take another dive in to look at the detail. In looking at the lists of sort of where everything is on some of the access and the research services that we have, pass-through returns, individual returns, corporate income tax returns can be different within a certain state. So don't assume that just because it said state income tax that it applies to your particular situation, your tax type, or if you're an individual. You really need to go to that state's website and check it out. I'm going to show you the Ohio guidance here in just a minute or two. Estimates. So moving, strictly speaking, from income tax returns, now we move to income tax estimates. So some states have extended these, some have not. Not really something that I can make a blanket statement on because they're just all over the map on these. So really, it's just, again, take a look at it and make sure that in your particular state you have an idea of where that is. So putting aside my tax hat for just a moment and putting on my advising hat, note that, with estimated tax payments, you're paying in advance for the 2020 year. There are penalties and interest and things of that nature that can apply if you don't pay them. And of course, in the tax business, wearing the tax hat, one always tries to advise, you don't want to pay penalties, you don't want to pay interest, so you should do the things that, are going to avoid those things for you. On the other hand, if you're looking at a difficult liquidity situation and you can get a loan, but you're going to pay 10 or 15% interest, the states don't charge you that much, So if you're looking to start pulling some of the levers of, things are getting in not so good territory, estimates might be one of the first things that you decide, relief or not, I don't know that I'm going to be able to pay those. Those are a relatively safe thing to short. As we'll get to later, like if I were to advise you relating to sales tax and payroll tax, don't short those. But if you're going to pull out of, paying some of the estimates, or you're making smaller estimate payments, because after all, your profit may be smaller for 2020, that's totally something that you should do. So pay attention to the cost of liquidity if you were to use other sources of gaining liquidity, both in doing estimates and in doing, tax payments. We've had a number of clients who, are in the hospitality line of business that are having terrible trouble. And so, when we start doing that sort of advising, it's maintaining a good risk posture and deciding, what's the cheapest way to maintain liquidity to just continue as a going concern, right? So on estimates, this is one of the things to kind of take a look at as you're going through and deciding how much to pay, whether to pay, and then the states have helpfully given you a little bit more time for that. So we were talking about trust fund taxes. So if you're not familiar with that term, so trust fund taxes are taxes that are collected by a business and who are doing that as an agent for the state or for the federal government in the case of the federal government. So an example of that is sales tax. So sales tax is not the company's money, right? Sales tax is owned by the state. You simply collect it for the state. And so when you do that, note that that's not your money. It can't be used as sort of a fund to continue operations, pay vendors, pay your staff. If you do those sorts of things, then it is possible for the state to come after officers of the company, owners of the company. That's why they're called trust fund taxes, because they can go right past corporate liability protections and go to basically the person who authorized the state's money to be used for something else. So not to get super legal on you, but, inside of a limited liability company, the company has limited liability, but you always have, personal responsibility for your own torts, your own wrongdoings. So if I'm in a company and I happen to run somebody over with my car, I'm going to be held liable regardless of whether or not, I'm an owner of this company that I was working for at the time. In the same way, on the trust fund side, if you are going to be collecting a sales tax and then redirecting it to something else, that's your own tort. And so that's kind of the theory behind why they're able to do that. It's the same thing for employee payroll withholding. So if you're withholding payroll tax from your employee, that portion of payroll tax is not your money, it's your employee's money, and that's the state's, it becomes the state's money, so it's never your money. So be very careful about that. Again, there are a limited number of states, as you see here, that have provided either a filing or a payment extension or both. I've just listed them out. Again, I don't want to get super in the weeds on all this, but if you file in a lot of states, it may be useful to you, specifically if you're looking to maintain liquidity, to go through some of these to see exactly what that provision is. And most of these are a monthly return, so this is going to evolve and continue to evolve. So I didn't put a lot of in the weeds detail up on this, but these are some of the states that have that going on. Again, check for relief on an ongoing basis, because these things are going to continue to come up as we go through the next couple of months. Will the economy be reopened? Will we continue to have some kind of limited scope economy? Who knows? So one thing I did want to point out, which is kind of an interesting one, is California. There is a limited program that allows you to do a payment plan for collected tax, which will allow you to pay it over a period of time. So again, as a liquidity sort of item, it's a really cool incentive. If you have minor California sales, it's not worth it. It's not worth the effort for it. But if you have a really large California picture where you've collected a lot of California tax, it could be a nice, you still have to pay it. It's not a forgiveness. But it may allow you to preserve liquidity over a period of time where the economy may, have an upswing later on in the year, where you'll be able to have a little less tight liquidity needs and be able to repay that loan. So our friends up north, Canada, GST, HST, depending on where you are in the country, this is a huge issue for you, because you're doing a lot of cross-border stuff, or you're not doing anything at all. So I have just one slide on here for Canada and on GST, HST specifically. So, they've provided an extension to June 30th for the payment of tax and filing of the returns for quarterly filers for the first quarter of 2020. And then for monthly filers, February, March, and April, they've provided that guidance. May, who knows, that may get added as things continue. So check that out. If you do have Canadian GST, HST, we can help you a little with that. Or if you want to go to their website and check out the relief and exactly what you need to do, I'd encourage you to do that. Trust fund taxes, part 2. This is the payroll, right? So we have the sales tax side. Here's the payroll side. Very few places have provided relief on this. California, Maryland, New Mexico were the only ones that I had found, at least at the time. So I have a little snippet here from the California piece on this. Employers statewide directly affected by the new coronavirus can request a 60-day extension of time to file and pay the taxes without penalty or interest. Note that this is an ask for provision, so you have to ask for it. It's not an automatic thing. And as you can see, this hasn't really taken off very far. Not very many states have adopted this particular one. Sales tax, there was quite a few more. And so for the payroll tax portion of this, it's a very small, very tight. After all, the states do have to have some revenue coming in. So this is one of the ones that most states have just passed on providing any kind of relief. Tangible personal property tax. So we no longer have this in Ohio. So if you have ever thought to yourself, man, I wish we didn't have the CAT tax. That's such an annoying tax. You didn't live through property tax in Ohio. So it's a good thing, right? CAT is a nice, if I had to pick, CAT is a nice benefit compared to the tangible personal property tax. It's a lot easier most of the time. So the tangible personal property tax, there are some extensions. They're kind of spotty. I have at the bottom there some of the states that have statewide extended some of these. You see DC, Idaho, Indiana, Louisiana, Maryland, Massachusetts, etc. Most of them are just for a month or two. I was just doing some Texas-related ones, and I noticed that some of the counties inside of Texas have provided an extension. Almost all of them have closed to the public. Some of them are business as usual, go ahead, do your filings, it's fine. And other ones have adopted we're not going to get to this for another month or two. You can file it if you want, but if it's a month late, we're not going to care. So even inside of the individual states, you've got some counties that seem to have gone in different directions. And I don't know enough about Texas to know whether or not that's something that Texas has got a problem with, that some of the counties have adopted something and some appear to be business as usual. I don't know. I think most of these are going to be a very specific individual county assessor kind of thing if you don't have one of these states that have given you sort of a blanket extension. So just do pay attention to that. And those deadlines are rolling. If you've worked in the personal property tax area, those things go from like February to September, and then you got stragglers before and stragglers after. So there's all sort of deadlines for different states and the like. So that one is kind of a monster to try and deal with. Probably best to assume that they're not extended unless you have guidance otherwise. There are some business loans and grants. So this is not exactly tax, so I'm going to include it up here in that it is relief. Most states seem to have some kind of capped interest-free loan program. Those are asked for loan programs. There's a huge variety in them. When I took a look at some of the options that were out there, Minnesota has like a $2,500 minimum. Michigan has like a $10 million maximum. Huge variation. There's a couple of grants that are sprinkled in there. They're mostly small. Some of them are limited to like the hospitality, business line, and they range from a couple $1,000s to $10,000. They're mostly small, but they can help out, particularly if you're trying to keep a couple people on payroll. So again, not exactly a tax thing, but I do include just a quick snippet on that to let you know that that is something that is out there that, you may want to investigate in your particular state. So then we get to the Ohio specific relief. So I do want to spend a little bit of time on this. And then this is sort of the last piece on this first wave. And then we're going to turn to the second wave and start looking at what's next, what's coming. I'm going to share with you some of the items there that states have already started to act on the second wave items, and then a little more prediction on what's going to come up after that. So for the Ohio specific relief, so here's some of the legislation and the language in there. So we have extending the filing of any report, and that also would extend the failure to file and the failure to pay penalties. Those would just come right along with that extension. Extending the time to file an estimated tax payment, same kind of thing, right? Waiving interest, and then automatic municipal net profit extension if the state income tax is extended. So this is sort of the package on the legislative side. So when we look at sort of what the actual relief is, so that was the theoretical. Let's put it into sort of the actual. Here you have individual income, school district, pass-through entity and fiduciary income tax return, municipal net profit tax, passed between April 15th and June 15th or extended July 15th. So Ohio sort of adopted that same time period as the federal government for July 15th. Note that all other tax types, no relief in Ohio, right? So you've got commercial activity tax, sales use, excise, employer withholding. Those are business as usual. We're continuing on with those. If they're late, they're late. One thing that I'll note on this, on tax types that are not extended specifically, you always have the ability to request an abatement of penalty. The normal course of action is that you can't get interest waived by the Ohio Department of Taxation unless there's legislation that allows them to do it in specific cases, which is like here. So for CAT, sales use, excise, employer withholding, you always have the ability to do a abatement request and see if they'll give you some relief. So at the end of the day, if you're simply unable to pay some of these items, you're in sort of dire straits. Note that there is the possibility that later on you might be able to request relief with your particular situation, and you may end up getting it. So Just because you don't have actual relief here, you still may be able to, on the back end, request it and maybe get it, particularly if you're in one of these hard hit sort of things. And we're going to talk about that a little bit in the second wave kind of item of asking for relief. So we'll talk a little bit more about that too. So I'm also involved in some of the ongoing audit items, controversy work inside of the firm's client base for Ohio. Note that at the moment, there's a hold on assessments going out for certain tax types, at least in Ohio. Resumption of that is supposed to happen sometime mid-June. It will allow you to preserve liquidity for a while. If you're in this sort of interesting spot where you are going to have an assessment issued, you do have a period of time to appeal that assessment. And so if you have a delay, you've got the period of time for the delay, and then you also have the period of time you'd have to appeal to hold on to that liquidity, that cash, and not make payment if you're trying to make choices about where you're getting liquidity from in the next few months. That's definitely something that's helping some people out. Note that statutes are cold. Technical term basically means like the time never happened. So just take the calendar and rip out a couple of those months as if they never happened. So most of the time, if you're running into a statute date, which would make this sort of difficult, they're working through that on their end. The intention on this is, let's just put a freeze on stuff, guys, for a little while. Everybody is they're all working from home. They all have things going on. Let's see if we can provide a little relief on that end. So that's been really nice for a lot of clients that are in controversy sort of phases with the state. So that has been not an official like pronouncement sort of thing where you'd have a lot of visibility on it, but it's something that Ohio is doing internally that is really appreciated by folks in the community and folks that are going through that kind of process with them. So Ohio really is doing a lot of great work for the taxpayers. We also have this provision. This is primarily a municipal income tax kind of provision. So this is for staff working from home in a new location. So if you have got staff that work out of a lot of different cities, a few years ago, there was some municipal tax reform that defined the definition of a day, where can sound silly, but in a particular day, where does a worker work? Where should their payroll be? What cities is the company in? And there is this situation where all of us are working from home now. We're all in a different spot. You may have a company that's used to doing payroll in one jurisdiction, and now they have people in 70 jurisdictions. And I was talking with our organizers, the other day on, admin, where if you said, hey, by the way, so now we're going to have everybody work from home. Can you just go ahead and set up and start withholding payroll in like 60 or 70 other cities, because we're going to be over the number of days that you're allowed to work in a city without doing payroll withholding. So we're going to need to set those up. And I can just feel the admin staff like reaching through the Zoom meeting to strangle the person that suggests that to them. So Ohio has this great provision here where, depending on who you are, it's great, I guess. If an employee is performing personal services at a location, so CPA work, other sort of things where you're not doing, trench digging, chopping down trees, working in a manufacturing plant, all those things. If you're doing personal services and you're required to work from home, basically because of the emergency declaration, then you're going to be deemed to be working out of your normal report to work location. And so what that basically means is that if you're in a service-based industry and you've got staff that normally report to this office right here in this jurisdiction, but now they're working out of 70 different jurisdictions, they're really just working out of that one jurisdiction, even for tax purposes, even though they're working in all those different jurisdictions. So it's a nice provision. If you happen to live in a non-taxing district, you might say that kind of sucks because that means you're still working in the city, though you're not actually working in the city. It's true, but this is a nice provision for some normalcy for how people are actually going to go through and do the payroll withholding. And so if nothing has changed for you in terms of where your city income tax is being withheld, this is probably the provision why that hasn't changed. So this last slide here that I have in this section before we get to the next wave is all about Ohio-specific relief relating to electronically signed documents. So if you've worked a little in the tax field, most tax jurisdictions don't have a high opinion of electronically signed documents. They require physical signatures, most of the time. So these are the hoops that you can jump through for just during the emergency. Ohio will accept electronic signatures. So you'll note that you've got this bold, italicized information. I don't know where it is on your screen, but it's over here someplace that you have to attach to this in order to make it actually work out. Just as an example of, even though we're still in the middle of what can be some not nice days, there's a little bit of fun here in the department on their reluctance to accept this, that they've put all these bells and whistles on it. And so I don't know if this is going to morph into a permanent sort of thing where they will accept this as an okay method of accepting electronic signatures, but it could be. We'll see. So that's pretty much all I have for you here on the first wave. We're about halfway through the presentation, so that works out nicely. And so let's dive into this second wave. So again, as you've sort of seen, most states right now are working on current due dates, providing extensions, providing payment extensions, helping with liquidity on a short-term basis, if possible, addressing state medical needs, getting relief out to businesses and individuals. If you listen to Mike DeWine, on a daily basis, he provides a really great update on what the state is doing, how they're making progress on various fronts. Not always or ever on the tax side of things, but if you want more information on sort of what's currently going on, most states I think have got a pretty good outreach program in terms of keeping people up to date on what's going on in that way. So the second wave is going to have some additional relief, and we're going to talk about that when it comes up here during this portion of the presentation. But they're also looking for how exactly we're going to pay for all of this stuff. If you've listened to Andrew Cuomo, the governor of New York, on some of the pieces that he's talking about with the budget, which are really interesting, what they have done is they've passed a budget that's sort of an aspirational budget, and it's based on their actual collection. So if they get the money, then this is how the money is going to be divvied up, is sort of what their budget has become. And so how are they going to get the money? Where's the money going to come from? We got to pay our frontline workers. We got to pay our hospitals. We got to put money in to continue to drive out relief to the people that really need it. So, do know that they're going to be coming for revenue, and they do have good reasons for coming for it. Even so, you don't want to overpay. So we're going to go through some of those things. Some things that you can do now to be prepared for that sort of push from the states. And then the other thing to be mindful of is, while you've been dealing with COVID-19, have you done anything that's going to cause you trouble in the normal world, right? And so colorful examples can abound here, but the idea is if you're hiding from or trying to deal with a very deadly danger, you might put aside this other thing that normally you'd be worried about, right? And so fill in that colorful sort of metaphor as you like, but that is a real thing that you should be worried about. As we've all been doing this, have we caused ourselves other trouble that when this immediate emergency is over, we're all going to look back and say, oh, that's unfortunate that happened, because now this is something I got to deal with. A lesser thing, but still something that may be difficult. So we return to our old friend Nexus. So if you've never heard me talk about Nexus, it's just a technical term for sufficient contacts with the state, whereby you could be forced to do something, pay a tax, collect a tax, file a form, all of those things. The way that I typically sort of explain Nexus to people is, imagine that you have a water balloon that's suspended above every state in the country, a water balloon. And inside of the water balloon is filing responsibilities, tax collection responsibilities, tax payment responsibilities, all of these different things. And they're all suspended in that water balloon. And the game with Nexus, or the thing with Nexus that is somewhat difficult sometimes, is that it doesn't matter how you burst the balloon. If you've burst the balloon, then all of those things are things that come out and things that you have to worry about and that you have to deal with. And so here we have two types of Nexus. You have Wayfair Nexus and you have physical presence Nexus. Wayfair we've talked about an awful lot. We've got some podcasts and some other outreach, and you've doubtlessly been Wayfair to death, if you listen to tax presentations on state and local tax over the last couple of years. Basically, it's an economic threshold over which you have to start paying the tax, collecting the tax, and the like. Sales tax and gross receipts taxes use this kind of nexus to require you to file stuff. Physical presence is basically everything else except for gross receipts. It also includes sales tax. So if you have physical presence nexus, you also have sales tax things to worry about. So I don't want to turn this into a nexus presentation, but you sort of need that sort of background in order to understand the next piece, something that some people are now calling coronavirus nexus. So we had Wayfair nexus, now we have coronavirus nexus. So what in the world is that? It's really an unofficial term for when you've got remote workers that are not normally in the state that they're in, who are now living and working in that other state. And so in the normal course of the world, if you have an employee who lives in a state that you're not in, and they're doing work for you there, and they have, company issued property like laptops and monitors and all that sort of stuff, that's a remote worker. And it creates nexus for you. If you have a remote workforce, those people create nexus for you. And that's all well and good if you've decided to hire, John in Colorado. Okay, that you're hiring someone in Colorado. They're based there. They're working from there. And so you're kind of on notice that, hey, I got this thing. The coronavirus nexus resulted when everyone sort of dropped everything and scattered. And they may have scattered to their homes, or they may have scattered to a remote work location. For example, here's John, who works in Columbus, Ohio for ABC Company. And due to some work from home orders, he's taken all of his work and work-issued equipment to his wife's parents' house in Michigan, which is where they're going to hole up. They got some kids. They want to utilize the grandparents to help, doing the work while they are focused on work. So this is a common fact pattern. ABC Company now has an employee in Michigan with a long period of time that they're working. They're actually doing the work inside of Michigan, and they've got company property there. ABC Company has got Michigan Nexus, right? Under our normal sort of remote workforce rules, this would seem to be the trigger. Now, at this point, I do want to pause here for a polling question that we have. As I mentioned quickly on this slide, which you may not see here, you've got a recent webinar that I attended that had 50% of respondents had this particular issue, where they had an individual who was working in another state that the company typically didn't file things in. So take a look and see on this question if you have this issue as well, just so that we can kind of see. And then I'm going to try and utilize the technology here to kind of see what our percentage is for this presentation. All right, and so let's wrap that poll up.
We have
So do we have
6% say yes and 94% say no.
Okay. So the webinar that I was attending was a more national webinar on this, and so that was a much higher percentage than what we have currently in the viewer base of this particular one. And so that's really good. I'm going to continue to go through this because it is something that you may find that even if you believe, this is not an issue for you, you may come to find out in some of the months to come that in fact it is an issue. Very few states have issued guidance on this. I'm going to show you their specific information here. So Indiana has dealt with this issue. So someone in Indiana tax knew that this was going to be an issue. They wanted to get out in front of it. And so they're one of the two states that, to my knowledge, has issued guidance on this. So in response to the new remote worker work requirements with COVID-19, the relocation that is directly the result of the work from home requirements, they're not going to consider as establishing Indiana Nexus for the purposes of, and again, more technical stuff, 86272. They're not going to consider that person as establishing Nexus for the company, even though normally they could do that. The rules are there that they could, crisis or no crisis, they could make that assertion. New Jersey is a similar kind of thing, and so you'll see there at the bottom that people working from home solely as a result of the closures due to the coronavirus are going to be treated as not meeting the threshold in terms of having Nexus in the state. This is going to be important, particularly where we get states trying to get additional revenue to pay for some of these programs that they're running out right now in the first wave. These are things to be mindful of, particularly if you have a state that's coming for you, to be able to respond to some of their questions relating to your workforce. You may have some new payroll withholding requirements, so take a very close look at reciprocity states. There are many reciprocity states across the country. Typically, there are states that share a border. And so the idea behind these is, as an administrative matter, it's easier to say, look, if you've got an employee that's living in this state and then they commute to this state, you can just withhold in this state. You don't have to withhold in the state in which they live if you have this commuting situation, right? You may still have this where you have people living and working inside of that border state, but that's rarer. So generally speaking, if you have that commuting going on, you've got this reciprocity that's happening. What happens if the work is being done without commuting? That's something to run through, to think about on reciprocity states, whether or not that reciprocity will still be maintained or not, based on the new working situation of your employees. If you trip this coronavirus Nexus, you do have new state sales tax Nexus, which requires you to do filings, consider pulling exemption certificates, taxability of your stuff, and tax collection. I'll tell you that in doing a lot of work on the Wayfair Nexus situation with companies, a large number of companies decide that most of their products are being sold to resellers, to manufacturers, people that would normally be exempt. And so what we've been doing with them has been a lot of exemption certificate collection and management. And so it's not necessarily you're going out and you're filing in a huge number of states, particularly if you're, just doing remote sales and most or all of your people really should be exempt. This is a good time right now to consider these exemption certificates. So even if you don't think coronavirus related nexus with workforce that's going to be outside of the, your normal filing picture is a thing, Wayfair is still relatively new. There's it's just a couple of years old. There's still a lot of people that are working through that we've seen in the client base and new people coming in. And a lot of that starts with, do you have exemption certificates for your people? Can you get them? Can you maintain them? Can you get them every year or so? And so that's something that you could be doing right now. Again, it's not like you're going to be audited next week, but this is something that you can do now that can really put yourself in a good position that if you ever did get audited, having those exemption certificates in hand gives you a lot of protection. So that's something that we're advising people to do, particularly if the business is sort of in a slower period right now. and you've got some staff that may have some time to do some things, getting an exemption certificate, a collection process going, contacting people, figuring out who you need to contact is one of the ways to be productive during the time. We help people out with those sorts of things, but these are things that internally your staff can definitely do. And if you should need help, reach out to your tax professional, reach out to us. More than happy to help with form letters or things that you need to kind of get that started. But that's something that you can do now that isn't really dollars out of your pocket, that does provide you some protection. On the income tax side, if you have coronavirus nexus with new people, or you discover later that you had some people that were working outside of your normal filing fixture state, this is mostly a 2021 issue. You're probably going to have to do a registration at some point, do the filings, do the payments of tax. You're probably not going to be filing estimates if it's the first year anyway. So this is an issue that's down the road, but again, it's something that might be there that you need to worry about or think about. Do also watch out for apportionment factors. So if you guys are already filing in a number of states, and you may not have gotten all the way in the weeds on some of this in terms of how your income is taxed in one state versus another state if you file in a number of states. But generally speaking, you're looking at sales percentage these days. You also have property and payroll that's in some states as well, but mostly it's sales. So, if 20% of your sales are normally in California and now it's 5% of your sales, the rest of your sales went somewhere else, right? Not 20%, it's 5%, so the other 15 are in other states. And so you may have a situation where you're really overpaid for, your normal core states that might have had closed locations or the like. So you may be way overpaid, and then you need to pay these taxes on the other side to these states that have that additional amount. So this is potentially a liquidity squeeze where you're waiting on a refund from one state, and then you got to pay for the other one. So your money's in two places. So just watch for that. Again, on the estimates, be very hyper vigilant if your business has changed in the last few months in terms of where your sales are going to be for this year. Contact your tax professional, maybe take another look at those apportionment factors. This is something that you can definitely do in the second half of the year if you want to as well, to make sure that you're in a good spot on those. NOLs and depreciation, so very quick touch on sort of the federal related items again. Federal law has allowed carryback for NOLs. States generally don't follow these. They generally decouple from those. So even in the rolling conformity states or the static conformity states, they can still decouple if they want to from depreciation, and most do NOLs and depreciation both. Take a look at your specific states. Just because federal relief has been passed doesn't necessarily mean that's been extended to the state. All right, so a couple additional things to be mindful of and to think about. You've doubtlessly seen, vendors who normally sell alcoholic beverages. They are producing spirits, moving to producing hand sanitizer, right? Some people are retooling to provide ventilators. Some people are retooling to do masks, and all of that. And these are great. And these are all first wave, guys, we got to get this done sort of thing. Just be mindful that there are some other sales tax related items primarily to think about. Normally, when you're giving away raw materials, machinery, product, if you're giving it away, there is no cost to it. Typically, there's a state use tax that applies that you have to pay for. If you're giving it direct to the government, direct to a nonprofit, sometimes there are provisions in the state code that allows you to do that tax-free. But what if you're just giving it to the public? What if you're giving it to healthcare workers, but not to the entity, not the not-for-profit, not the government, right? How does that work in terms of sales tax and use tax? So for now, the default kind of provisions mostly are going to say that unless you're very specifically giving it to a tax-exempt entity and you got documentation on that, they're going to ding you on it if they were to audit you. Additional relief is likely coming on this. try to maintain as much documentation as possible when you're doing these great things that are helping the community out. You would hope that the states are going to pass legislation in this relief, next round of relief, to allow these folks to get a better deal. You know, a couple of examples here. So Indiana has actually already waived the use tax on these donated items. So they have pretty well blanket said, and I'm going to show you their pronouncement, which I have up right here. You know, they're encouraging people to do this giving away of medicines, medical supplies, food donations, and the like. I'm not sure if you can see this on your screen or not, but that is something that you know, is out there, something that Indiana specifically is doing. New York has generally said that you know, unless you have it in the regular course of your business, that isn't unless you have held that in the regular course of your trade or business, they're not going to give you a use tax exemption for that. But the New York governor has made clear that they're more than willing to buy the product. And so if they're more than willing to buy the product, again, a sale to a governmental entity is exempt, where giving it away means that you typically owe use tax. So just keep that in mind. Okay. Another kind of last minute thing on this, because I know we're running a little short on time, is what states rule apply. So even if you have stock that's in Ohio and you're giving it to New York, let's say, is it Ohio law or is it New York law that matters? And states, the little that I've dug into this on this particular topic, have been not static on this. I think Alabama was the state where I saw that currently, if you were to take stock out of your inventory that's sitting in Alabama and then you send it to New York, they consider that an Alabama use tax triggering event. So you would pay Alabama use tax. And then when you deliver it into New York, you may also trigger New York use tax. So just be mindful of how exactly you're doing this. It's awesome that your company is involved in helping out with the pandemic and the community. If you are a tax advisor, you know, when you're talking with your clients, I would just say, you know, be cautious, think about it. You want to provide masks. How do you provide masks? Can you provide them to the hospital? Can you provide them to the government? Rather than, you know, handing them out to workers as they walk into the building. It's a small difference, but for tax purposes, if you care about the tax consequences on that particular thing, there could be a little difference there. So future relief, in the interest of time, I'm not going to go through the handouts that I have on this one. We can provide them to you. For Pennsylvania, the term is, I think it's a life-sustaining business. In Ohio, it's if you're considered an essential business. Could we have additional state relief based on if you are one of these two categories, an essential business, whatever your state definition is? These are extremely broad categories. Most of the time, Michigan, I heard, has a very restrictive kind of policy, and so they may be one that could actually do an incentive based on people that were in essential businesses and that remained open. Ohio's is huge. There are a lot of different categories of people that are included in that. If you've seen the director's order on what are essential businesses, it's pages and pages and pages of stuff. You also have the CISA cybersecurity guidelines from the feds that most states have said these are essential workforce. These are people that work in dams. We can't have foreign enemies, you know, during this period of crisis, gaining access to our critical infrastructure. And so a lot of those workers are considered essential kind of countrywide. So it's very unlikely that you're going to see a second wave of relief specifically targeted on someone who's an essential business or life-sustaining business. It's more likely that you're going to see hyper-targeted relief based on it's the hospitality industry, it's this industry, it's this specific carve-out of people inside of this greater thing that you may see relief for. What other kind of relief might you see? Again, we talked a little bit briefly in the first section there on these tax types are not extended, but even so, you filed them late, you paid them late. Is there an ability on the back end to request abatement of penalties? And that's the kind of relief that I would expect to see coming in this second wave, where if you have this sort of on a case-by-case basis situation that might be industry-based, you'll see state tax departments and perhaps executives and perhaps legislatures doing specific secondary relief guidance that's coming out, 6 months from now, where people are in collections or are paying back issues and they are asking for relief, and it comes up because there's a lot of them inside of the tax department. So I would expect that you'll see some of that comes up in the future. Couple of last things here. So do prepare for when things become dire. If you're already in one of these industries that's really hard hit, hospitality, restaurant, bar, all of that, do really be careful with the trust fund taxes. I've already had some people, who have called in the client base and asked on these things. Really think about shutting down operations before, you'd be able to continue working, but you'd have to borrow from sales tax collections in order to make things work. You're not really making things work at that point. That's a dangerous sort of thing. So definitely think about, your options when you're at that point. That should be a point that you pause and you think for a minute. Or if you have a client who's going to ask you that question, really think about advising them. You may want to think about temporarily, shutting down the business rather than doing that. Also, double check on who the responsible person is. So that stuff doesn't get updated all the time. And that's the person that the state's going to come to for the trust fund taxes. So think about who that is, see if you can figure that out or make a proactive change. Again, I didn't want to really focus on this in a huge extent in terms of the states coming for revenue. It is going to happen, though, and it's for a good purpose. I think if you ask most of us, hey, the state needs to get this tax from you so that they can pay some of these hospital workers, there aren't too many of us that are going to say no. So even so, you don't want to overpay. Note that if I had to use the crystal ball and I had to think about, where is the state's going to get this money from? This year the revenues are down. 2020 is not going to have the same kind of boost from income tax, sales tax, etc., that the states are going to be able to go and get. There's going to be some political pressure, I would assume, on targeting essential businesses. Why are you going to go after restaurants when we just gave them a bunch of money to try and keep them afloat, and now you're going to try and collect all this back tax from them? It doesn't make sense. So who is it that they're going to target? So for me, I would say prior year, not 2020, non-compliant, non-essential businesses, and probably businesses that don't have a physical presence in the state. They don't have, a bunch of big box stores where, they're in the state, they have payroll in the state, they're paying their taxes, at least some of their taxes. It's going to be these remote sellers and the like, who are non-essential, non-compliant, and have high prior year, income bases, sales bases, tax bases that they can go after. And when they go after them, they can get, 5, 6, 7 years worth of taxes going backwards. So if I was in the state discovery department, this is where I'd be focusing, the attention. So if you happen to be one of those sort of people in that picture, do be careful about that. I know we're here on our last minute, so one thing that I'll leave you with is, right now you have the ability to prepare for a lot of this stuff. It doesn't cost you money. You don't have to go out and do a bunch of these filings, voluntary disclosures, and the like. If this was a normal times kind of presentation, I'd be going through all that stuff with you. But for now, look at your exemption certificate. Look at your ability to pull invoices. Ability to pull invoices for audit. Hey, we have this trial balance item, this GL item. Can you pull the invoice associated with that? Do you have your purchase cards? expense reports, that kind of documentation ready. There's a lot of sort of fiscal hygiene that you could be doing to make sure that you're ready for the next wave when it comes. With that, I believe that we are out of time. If you do have questions, feel free to email us. I'll do my best to answer some of those, and we'll try and answer some of those. And we may have some additional documents that we push out to all of you. Slide decks are there for you. We'll also, provide those along with some of the attachments that I didn't get to. And so with that, I thank you very much for your time and attention today. And I hope I gave you a little bit of things to help you out with, think about, and till next time, I'll see you guys later.
Joe, we were going to go 5 minutes longer if you had a little bit of time to ask a few of these questions, and then I can email you the rest. Does that sound good? Okay.
Yeah, of course.
That I have here is, our municipal tax estimated payment due dates extended as well?
And I assume that is for Ohio.
I'm going to assume yes.
Okay. So I do know, let me go back here to the Ohio guidance. That's a great question. So when I was looking at the legislation on this, I know that they included a blanket if the state were to extend the municipal income tax or the state income tax due date, the municipal net profits tax are automatically extended as well. I don't think that it mentions state or city estimated tax payments. So in both the relief from the tax department and the relief granted in the legislation, I don't think it was specific. Well, in the legislation, it was not specific regarding estimated tax payments, and I don't think that the state was particularly clear either. The state's guidance extended only to municipal income taxes that were administered through Ohio Business Gateway that the state administers, but because they extended the state income tax, non-Ohio state administered municipal income tax filings are extended. I'm not sure about the estimates, though. I can take a look at that, though.
Great. And these questions over to you. So Joe will give you a personal response to that one. And the next question that we have here is, have you heard of any extensions for city taxes, whether personal or business?
Yes. So for the Ohio, on the municipal income tax, yes, those have been extended. On the individual side, it's an automatic extension. The business net profits tax, I believe, have also been extended. So for at least for Ohio, yes. I was looking through some of the other guidance for other states regarding municipal or city income taxes, and there are some states that have also extended those. It's sort of a grab bag as to which states actually have them and if they've extended them. So I would say for Ohio, yes, generally speaking, those are extended. But for the other states, you really got to check. If you have a specific state or suite of states you want us to help you with, we can take a look at that for you.
Great. And then we're going to do 2 more questions here because I know everybody needs to hop off and get to their meetings and things. But here's the next one. Do you anticipate any drop-off in real estate tax collections in Ohio, such as higher default rates, chances on any changes to valuations for counties reassessing or updating? And I know that was a 2-part question, so if you need me to repeat, let me know.
Yeah, so I might need a little more detail on those questions, but in terms of our state revenue is going to drop, I would say yes. Ohio has over 50% of its income in sales and use taxes. And so if you have entities that are shut down, that are not buying materials to manufacture with, to the extent that those would be subject to tax in the first place, or making sales, you're going to have a drop in those sorts of things. If you've been to a supermarket recently, like the folks that are manning the checkout counters aren't necessarily happy, but if you see the managers walking around, they're having tremendous, outstanding, amazing economic activity. Some sectors are doing great. Some sectors like restaurants and the like, it's been a month since they've made any sales at all. there's no sales tax revenue coming in for them. So I would definitely think that, the state revenues are going to go down. That's certainly true. Someone was asking DeWine whether it was raining in Ohio in terms of, the rainy day fund, and he said, it's raining. It's definitely raining. So there is going to be a budget shortfall, I'm sure, in Ohio. New York, very clear budget shortfall. And so if you're looking at doing, what's the fiscal health of a particular state, agency, et cetera, that's definitely going to have an impact for 2020.
Great. And then the last question we have here, and let's get to your question, we will reach out. We have employees that work at various locations throughout the year. For the municipal tax time frame during COVID-19, would these employees claim their home location for this time period, or would they estimate the time they would have worked at these various sites?
So you cut out there. Let me try and finish that question. So if you have employees that are normally working outside of the state of Ohio, or in a different municipality,
Joe, do you have sound on your end? Okay, guys, I'm going to end today's webinar. It looks like we lost sound there.
Sorry, I'm back.
Oh, okay, perfect.
Sorry, call failed out in the middle of nowhere. Sorry. So to answer that last question, then we'll wrap things up. So if you see the slide over here, know that the report to work is because they're at home because of the emergency declaration. So if they are going to be utilizing that language over here, the actual relief is for their principal place of work. So it would be the majority of time their report to work is. So if that's the location, if that's their home, that's their home. If they go into an office, it's their office. If they're just all over the place, then it's probably all over the place. And note it's just for personal services. So if you're going across the state and doing other things and it's not personal services, it's something else, then this relief does not apply to you. So you may be in a situation where it's business as normal, whatever you have done in the past, you'll continue to do. And I think really that's what the provision was designed to do, is to make it so that whatever you have been doing, just keep doing that, and don't let this stay-at-home order throw a wreck into your normal payroll withholding process. Just do what you've been doing. If you've been doing it wrong in the first place, then I don't know if this relief really helps you at all, but hopefully that helps. So, all right.
Thanks, Joe.
Thank you again.
Thanks, guys, for joining us for today's webinar on what is life after coronavirus, state and local tax, first wave response, and second wave predictions. We hope Joe was able to provide you with some valuable insight that will help us with the current government recommendations stemming from the COVID-19 crisis. If you sign up today and realize you have additional questions, you're always welcome to reach out to Joe directly. You can also contact any of our REA team members from the firm's website at www.reacpa.com. That's REA. Don't forget to watch your inbox for an evaluation survey, access to the recording of today's webinar. Thank you again, and we hope you have a wonderful rest of your day.